Hello, today's Wednesday, July 30th, 2024, and here is Jason Shapiro trying to make sense of it all. So we had Fed Day today, and it certainly did not disappoint. Seemed that Chair Powell was a little more hawkish than people would have liked, and when that came out, the markets went into a little bit of a tailspin. Um, And to me, the whole idea of being long the stock market right now because of interest rate cuts is stupid anyway. So hopefully those who were in that trade for that reason got out to get some of those weak hands out. Because of course after that happened, then we had earnings, and it looks like everybody's earnings blew out away, and Microsoft and Meta and all these people. And we've been hearing recently from bearish people that, oh, good earnings are not being rewarded very much. And, well, they were rewarded today. And the markets came right back, and the Nasdaq ended up closing on the highs. And the S&P ended up closing on the highs. At least the futures did. Russell got hurt the most through this, which would be expected because interest rates went up. And the Russell is theoretically the most temperamental towards rates, given small caps, and they need to borrow, and they don't get such good rates as the big caps do, and so therefore they need lower rates. So the Russell got hit the most, not unexpected. The dollar, of course, really ripped today, and I've been talking for a while now about how consensus this short dollar trade has been. And while you don't need to necessarily be long dollar, I thought that being short the dollar was probably not a great risk reward given the consensus view of it. And it has been going up really since July 1st. Pulled back, but now has gone on a ripper. And it seems that now some dollar shorts are in pretty decent trouble here. We've basically erased 6-7 weeks of losses in the dollar here within the space of, I don't know, 5 days or something. So people caught short dollar. They're getting hurt here. And hopefully they get squeezed out. Some interesting stuff in the metals today. Obviously, there was some news on the copper, which sent copper down 19% on the day. And again, copper is a great beneficiary, we are told, of the AI trade because of the electricity that needs to be produced and how much copper is needed for that. And that's probably all true. But once everybody knows that, the risk increases. And shit, it certainly increased there because copper lost 20% today and it's down like a lot. In the last 1, 2, 3, 4, 5, 6 days, right? Just another example of fundamentals might mean something, but what's discounted in? That's the question. And in this case, it seems like there was a little bit too much discounted in. And the other metals, got kind of crushed too. Palladium down 4%, platinum down 7%, silver down 3%, even gold down 1.5%. Not looking great there, and it's probably a function of the fact that the dollar is going up so much now, and then everyone likes to see those correlations between dollar and metal. So, again, nothing abnormal there, but something to learn from the idea of, consensus and not needing to be short something, but maybe not being so long once consensus kind of hits there. That's the idea there. Energies didn't do much. I think it's pretty fascinating the difference right now that's been happening the last few days or to a week between heating oil, where we see massive longs, and the rest of it, like crude and RBOB, where we don't see massive longs. Crude and RBOB are just crushing heating oil. You're talking about 6-7% in just a few days. Great pair trades sometimes can be found when it's like that, and there's one of them. And that was really it for today. Interesting, fascinating, volatile, but not really that unexpected and not really that different. I think today's low will be an interesting place to watch now, in things like the Nasdaq and the S&P, given that there was sort of like a little mini panic there post Fed, and now those people that are mini panicked are quite a bit out of the money. I mean, the S&P futures finished a good 30, 60, a good 60 something points off its lows. So an interesting place to watch there. And today, clearly, at least for now, the market's reacted well to earnings. So let's see. We got some more big earnings coming out tomorrow. And then, of course, we have the big employment report on Friday. So let's see how it all reacts. But so far, interesting, but not a lot of big surprises would be my view. All right. Thank you. Hope everyone's doing all right. And we'll talk again soon. Hi, I just wanted to say, if you like these daily videos, we do them 4 days a week, Monday through Thursday, for people, and it costs, $10 a month. And I try to include a lot of other lessons as I go through, as you see in the daily videos as well. For that $10 a month, you also get our COT charts on equity indices and crypto. So if you think that's worth it, give it a shot. All right. And we hope to see you there. Thanks.